What's up everybody, Tom here with another video. In today's video, we're discussing everything to do with the stock markets and markets around the world right now, including our thoughts on the SP 500, Nasdaq, Bitcoin, Apple, Tesla, and others. We've just seen the US Senate appearing to be in a temporary truce. And while we expected yesterday the market to fall in the session, it came straight back up, ripping into a very important resistance. Will we break that resistance in the next session and start to put the bears at rest? Stay tuned to find out more. Okay guys, well here begins our market recap for the markets closed 6th of October 2021. And when we take a look at this heat map over here, you'll notice that things like Microsoft, Google, Amazon, they were all up relatively well, putting on some of what they lost in the previous session. My eye instantly goes to utilities though. Surprising that utilities, real estate, and consumer defensive or staples were doing better than you would expect. And we'll talk about that more in just a second. The markets did open up down, and this was very customary of a sell-off into the close. If you take a look at our live session that we did for the close yesterday, and we talked about literally this exact reason and what we thought we would see over the futures market, the futures market sold off. It opened down right on our support for the SP 500 and Nasdaq, and then started to rally. And the most important part of this rally was, even though it looked like it was selling off close to the end, it actually rallied right into the back. And this put us at a very important resistance level we'll be talking about soon. Another thing I think I would note here, and this is more for the bears out there and the bears in the market, is it was strange to see utilities and consumer staples and real estate being the top three market sectors on this recovery through the session. That's unusual. As we know, they're defensive sectors, and they tend not to be the ones that pump first when it comes to a proper bullish movement up. So we got to keep an eye on that and see what the rotation continues to do as we see in the next couple of sessions. So a few things about this market. This is what we've got drawn up so far. We obviously have this downward trend line, which we haven't got to yet. And if we get around that 440 area on the S&P 500, we'll basically be going through this downward trend line. And I think really putting a good way forward to saying, okay, this correction is fully over and we're moving on to new all-time highs, etc. But if we think about what we've done so far, we've done around a 6% pullback on the S&P and around a 8 to 9% pullback on the QQQ or the Nasdaq. And this is traditional with most corrections. You shouldn't be expecting 15 to 20% corrections most of the time. It's always going to be in these boundaries. For the Nasdaq, somewhere around 8 to 12%, we've detailed this several times, is a really good level or range to be aiming for when a correction does occur. So if you look at this SPY right now, 430 has been the major support. We saw that selling into the close, long leg doji, rejection candle, and then of course the sell-off, and then bam, the futures went straight down. And what do we get through the next session? We get a long leg doji, bullish breaker up, it fills the gap, and goes straight back up into the resistance and closes around there. So in essence, what are we in? Well, I think the SPX chart will probably show it the best. We're in a channel, guys. We're literally stuck in a range between these two levels, between around that 43, kind of 76, 80 area and this 42.87 or 4300 area. People have been buying the dip here. I don't blame them. And people have been selling the rip in these areas. And a lot of people have been getting very bullish here over the last couple of minutes or last couple of hours since the close, because they're seeing the futures get above this range. Remember, it is the fake market futures. We'll take a look at them in a second, but this is exactly where the Wall Street guys want to close above if they're going bullish. And if then we basically go into the 4,400 or the 440, we hit that trend line on the way down. And if we get through that, well, we've done the repair. And the best thing about this type of market is when you think about it, what's actually happened is if we do bounce off this zone, move up, firstly, the channel distance puts us straight into the resistance over here. So this is the channel distance here. Once you close above, you look for the distance of that, which is of course here. This is A equals B pushes you right into the resistance. So really cool trading coming up should that occur. Then if it gets through this zone, what is this in essence? A giant double bottom. So a giant double bottom in the direction of trend, it's another fantastic signal towards the buy side. So there could be some big bullish movements here if the bears can't put a controller on the S&P 500 over the next couple of sessions. Remember, Friday is non-farm payroll day. Take a quick look at the futures so you guys can see where we're at. Notice the futures are actually through that 76 zone. They're going towards that 4,400, which is the next little bit of problems. And I would expect something like this to occur. Basically pull back, potential little movement there. And if we get through 4,400, we go to fill that gap. We move up to these resistances and the bulls are firmly in control. If we open around 4,400 and Wall Street decide to push it straight back under into this channel, remember only the fake market futures have truly gotten above, because it would just be a gap up and then sell off down. So if we end up back in this channel ahead of non-farm payrolls, that's going to be obviously a negative thing, and the bears are back in control of the market. I cannot emphasize how important these types of things are on the markets when you see them. If you go back through history, you'll notice that these bigger channels tend to be relatively correct, especially if they break towards one side, and maybe even the bullish side seems to be quite good. Let's take a look at the options. So this is the options from the previous session for expiry on the 8th of October. And if we look at the options, we've got that put wall that we discussed sitting around the 420, and we've got a call wall sitting around the 440. So again, it's not in the best interest of Wall Street to really expire anything above or below. So below or above this zone. They would like it to be in the middle if possible. Then we take a look at the actual last 24 hours, and what you'll notice is that way more puts came into the market. Take a look at all these strikes. It now becomes best for Wall Street to close in here between that 435 and 440 zone, and that's kind of where the market is right now. So many puts opened to the negative side. I'm surprised how many people actually did start opening puts, considering they didn't have that much confirmation, but this is the type of thing that it does. It traps retail and it traps people into fear and, of course, setting positions. And we started discussing this in the last session. So very interesting levels here for the SPY. Stuck in a zone. You can see that massive put wall at 420. Even after bad non-farms, you wouldn't expect it to be able to get underneath that zone. Let's move over to Tesla now. So Tesla, been lackluster considering the market movements, but it hasn't been worrying in any real way. We have here the movement on the daily. You'll notice the daily 20 has been an okay pickup zone, and we've got that 760 support or resistance acting as support, plus the 20 now behind. Really, for Tesla, it's only a matter of, can we get through 800? I mean, you can see the problem with 800. You close above 800, I would think that is a very big alert for a lot of retail traders and a lot of retail investors, and they'll look to push and buy a ton of options. And I think $800 is the magic number here for Tesla. A closure and closure only above that zone is quite bullish, and at this point it's just consolidating. Volume's not really declining any particular point. It's not looking that bearish or anything. And if we have a look at the options overall, just heaps of people are stacking bearish positions against it, but it's not really looking very bad on the market. So I'm surprised again that most people are doing this, but really, should you be? Remember, the market is tricking and trapping most people. If 70% of options expire worthless and we have huge amounts of puts on a stock, is it more or less likely to go down? Oftentimes, it's contrary to what you believe. It actually stays or hovers in a range, waits for these things to expire on both sides, and then makes the decision. That's why we call it a put or a call wall. Move over to Apple, because this is probably the linchpin of the market. If Apple gets back above this 142 resistance, it snaps our trend line on the way down. It also gets through this previous support, becoming resistance area. So Apple is at it's super important level. We've talked about the 130, 135 trend line as being our ultimate case scenario, but we've also talked about this 142 many, many times. And we like both levels. We've always liked both levels, and it looks very similar with the idea of the long leg doji on the 2 hour, the closure above, the movement to the gap, and then straight into the 142 for the close. So next 24 hours in the market's super important here. Should we close above, we hit like a 144, possibly pull back to the 142. And if buyers are going to come back in, they'll be wanting to push that level, or at least the trend line down, and push that up. So Apple here, really, it's the time for the bears to come back into the market, should they be able to do it. And the debt ceiling, whether anyone really feels like they're not going to approve that or not, I've always thought that they will. I'm going to go with optimism pays in the markets in general. So yeah, I don't think that's that big a deal. I actually think that Evergrande situation is way bigger in China, with the other extra one coming out. But at this stage, Apple at resistance. we need to see a little bit more information. We've also got all the expiry puts and calls. You'll notice here the calls are sitting heavily around that 144 and 145 range. So that's where we don't expect it to be closing above on the Friday session come the 8th of October. And it's just another good chart to look at, more geared towards the buy side here from retail and from the average call weekly investors. Now, the elephant in the room, the US 10-year, it didn't do it yesterday. It didn't get through a very important area of 1.56, 1.55. We actually got a rejection candle. And if this candle is closed above, we know that statistically and, of course, from a technical perspective, we should be pushing into the 1.7. Now, we also know that the US 10-year, if it does go through this zone, whether it be non-farm payrolls or the Thursday session, tends to have a downward effect on the QQQ. So the QQQ or the Nasdaq or growth stocks tend to underperform. And of course, finance tends to overperform because the 10-year, it really puts a massive pressure on growth stocks. So we'll be watching this closely. We mentioned it yesterday. We'll continue to mention it. It's a very important chart. And imagine if you close above that now. You've got rejection wick, rejection wick, rejection wick. You get above, it's a free-for-all, and they're allowed to push it much, much higher. Another one is going to be oil. So US oil has come back down, kind of like a falling knife after hitting close to that $80 a barrel. And it's come back to this 76, 77 zone. Now, we talked about this area as being our ideal kind of pickup area, and it certainly is. But what we need is we need turnaround city. So something like a lightning bolt, something like a base formation on the smaller time frames. You don't just buy a falling knife on the pullback, even though it might be a great area. Trading is more about trying to stack as many reasons as possible into buying a position. So you need at least 2 to 3 separate reasons. And you've got trend and you've got a role reversal, but you don't have a change of trend here. And you also don't have a few other things that you might be looking for. So remember, at least 2 to 3, and I prefer 3 to 5 separate reasons to be in a trade. So US oil right at support, previous resistance becomes support, but needs that turnaround story. Move over to the QQQ. This one is the most bullish looking of the indices. That's probably why it's doing the best in the futures right now. It's actually trading around 14,863 at the time of the recording. But we have that downward trend line, and this has got all the wicks through it, and you'll notice all those wicks. It did close above those. It didn't close above our horizontal line. And for me, it's one of those situations where I guess if I was trading at the close, and I mentioned this on the stream, one of the things that a lot of people look at is scaling into a position. So effectively, they might say, okay, this is a marginal close. We know that we've got a lot of problems here, but I also know that we've got a close where Wall Street is buying and we've gotten above our downward trend line and we're feeling a bit more positive about it, and I'd like to be in. It's one of those things where practicing scaling can be worthwhile. And I think some people would have done that. And if they are, they're feeling okay about the futures. But really, the main market has to actually close above these levels for us to be able to say, okay, let's go fill that gap on the left-hand side. And this is what a lot of traders are looking for, filling that gap. They want to do it, but the bulls and the bears haven't finished their fight yet at the resistance at the 360. That's the very important zone. If we look at the overall picture, Nasdaq hit exactly what we thought it would. We were aiming, of course, for possible dip purchases into the 14,050. That's still the best case scenario for the bear side, I believe. At least that I won't really go any further than that and thinking it comes back further. But this trend line is currently holding up, and look, anyone can see this. And if everyone's seeing it, specifically Wall Street, and they've been buying this one, there is an advantage of the market going bullish here. And if it does, the main advantage is you've got the top end as well. So it gives you a great take profit in the future once that market goes up. So we're still stuck in the range. We're right here, right now, and you can see how important this breakout will be. The next breakout, what's going to happen is this distance, bang, straight into 15,000. What are you going to hit there? You're going to hit these two moving averages, the 20 and the 50, which have crossed down. And then if you get through there, we fill the gap and move up to this level, which is going to be around that 15,350. So there's some good zones. We'll keep going through it here on the channel. So remember to subscribe and give us a like if you do enjoy the videos, and that's something we'll watch. The other elephant in the room, Bitcoin. Wow, I didn't expect Bitcoin to be 55K so fast. this just blew my socks off with how much this went up in the session. And it's a phenomenal move. Look, you do not bet against the bullish trend when it comes through. And this is kind of a similar scenario to the markets when you think about it. You had a bit of a channel, you broke through the channel, and then you started a very nice ramp of recovery. And that's the nature of technical analysis. You have a channel, you have a range, you go to the next resistance. Hey, this is very similar to what we just saw on the S&P and the Nasdaq as well. Then you channel for a little while, you close above, and that begins that even more rampant attack on the buys. And it's hit 55, which I think for a lot of people will be a partial take profit zone. I still wouldn't be surprised to see Bitcoin come back down, test that kind of 52, 53K high, and then continue up. Remember, this 20 moving average has already shown on the 4-hour that it's a good little level of support, and it's quite far away from that price. So Bitcoin's doing amazing. This bodes well for the rest of the coin market. But in essence, what it's just done there is blown a lot of people out of the water that were shorting it. And it said, you know what, maybe we are ready to go to a new all-time high by the end of the year. Remember, November, notoriously pretty bullish here for the crypto market into Thanksgiving, etc. in America. 7-month win streaks, we've been talking about this a lot. We actually got a little bit deeper pullback, or about the same pullback as we expected. So these types of pullbacks are all you usually get after having a very aggressive market statistically. We got about a 6% in the S&P and around, as I said, a 9% on the NAS. There is the potential for a little bit more considering the Evergrande situation, but we'll watch the price action and put our opinions at the door. We like to trade technicals and statistics here. So realistically, if we came back in 6 months' time, most of the time the market will be up by a decent amount from where it was. And that's probably the most important statistic really for a lot of people and their sentiment when it comes to investing. Another thing is that the Friday, October the 8th point here is going to be very, very important. This is 8:30 a.m. New York time. We have the non-farm payroll change. Probably will change the game. Will certainly push the US 10-year and the dollar index. And that is going to be the linchpin for whether we go bullish or we go bearish, I think, for the next week. Thanks so much, guys. If you enjoyed the video, please remember to smash that subscribe button, hit the like, and we'll see you at the next live streams as well. Bye for now.